Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of November the 7th, 2011. Now, to get started this week, we're going to begin again where we always do with the US dollar index. This week will be a week that's determined by risk on or risk off. I'm sure that everybody is tired of hearing that particular sentence, but let's have a look at it anyway and see if we can determine what's actually going on here. Now, looking at the Vantage Point software, I've talked about this in last week's Forex Weekly Outlook, that I felt the dollar would rise based on monthly patterns, more importantly seasonal patterns, where we were 1 year ago. Now, just to bring everybody back to that, or if somebody didn't see last week's presentation, we can see that the dollar went on a real big rally last year at the beginning of November that lasted basically all the way through until the middle of January. So looking at things, it does appear that that seasonal pattern is still in play. The dollar has come down, touched the exact level where it did 1 year ago to the day, and then started to rise off this level. Now, more importantly, what we're looking at going forward, is the risk trade really on, or is the risk trade really off? My opinion is it's off. Now, looking at this signal that is forming right now from Vantage Point, this signal here with the predicted MACD and the predicted true strength indicator in heavily oversold territory, they are both just crossing this trigger. We can see that any other time that this has happened, the market every single time has made a very big move. We can see it back here where it did it at the end of August, where we got into this huge dollar rally. Then we can also see the downward move on the dollar back here at the beginning of October that lasted for the better month of October. So this cycle now looks to begin itself again, that we will have a fairly substantial rally starting in the dollar. So that's a big part of what we're looking at this week when we're just going to bring this back up. This is a big part of what we're looking at. Now, the predicted short, medium, and long-term differences are sitting just above that zero line at trend ready levels. This is a very important thing that I'm saying, because this signal, as I've said, it is almost never wrong, and I certainly would not trade against it. This tells me that the dollar is going to gain strength in the days and weeks ahead right across the board. So that may not happen overnight, but I think it's going to happen sooner rather than later. I think we're going to see a big, we could actually see some dollar weakness to start the week up until about midday Monday, and then we're probably going to see the equities nosedive and the dollar go up. Now, looking at this right now, we've closed at 77.16. That is above all three of these Vantage Point predicted moving averages. That's an excellent bullish signal, and we're right at the beginning of this particular rally, so let's not lose sight of that. This brings me to the equity. This is the big correlation as of late, is equities versus the dollar. Well, we can see that the equities are struggling. They are really struggling. The predicted MACD, the predicted TSI have gone completely flat, sitting on the trigger. This appears to me that it's getting ready to break to the downside. That's what this is telling me. So maybe one more push up on the equities tank, the dollar goes up. Now, it's not to say that the equities and the US dollar cannot move up at the same time. That it's entirely possible as things start to look better in the US from the economic standpoint, kind of helps the dollar out a bit. And of course, if the equities do move higher, they have to use dollars to buy into that equity market, into that equity play, excuse me. So there's a interesting dynamic here that could potentially happen, but I just do not see this as a risk-on environment. Given what's going on in Europe, given the ECB is cutting the rates, the Eurozone's a mess, Australia's even cutting rates, the jobs data that recently came out of Canada Friday morning, Canada is certainly no safe haven. So the global economic picture is not really a risk-on environment, not in my respectful opinion. This again is pretty much solidified with what we see happening with gold. Gold continues to push higher. As the global economies begin to really struggle, gold continues to push higher. Now, this is, in my opinion, it's mildly bullish for silver, but silver predominantly has been following those equity markets. So I wouldn't be getting overly bullish on silver. And as for light sweet crude oil, I certainly would not be getting bullish on this. I would be looking for this to start a turn to the downside very, very soon. When the S&P turns, then the light sweet crude oil will follow it. This is a very likely outcome in the days and weeks ahead. So keep that in mind if you're getting into these commodity trades, because it's an issue. What's happening in one day doesn't necessarily mean what it's going to look like right across the board. We can see the 10-year notes rising in the U.S. with the U.S. dollar. That's also a good sign that the U.S. dollar, pretty much the prettiest horse in the glue factory. Maybe again, I think I've used that terminology in the past. I would stick with it again here. Once again, things look better in the U.S. right now than they do in a lot of other places. Now, we're not going to worry too much about the futures contracts on a currency basis this week, because I think we've covered it based around the US dollar and the equities. Let's move into our currency pairs. Australia-US. This is a risk on, risk off currency. So if risk turns off, which is what I think will happen, we can see that pretty much every single day last week, the Vantage Point 18-day predicted moving average was breached. We've closed at 103.84. We're sitting right on this line, 104, 104.25, 103.49. You can see that we're closing below these levels. My opinion is the Aussie dollar is likely getting ready to sell off. Now, when we break this down by crossover, you can see that this medium-term crossover has crossed to the downside. The predicted TSI and the predicted MACD are beginning to follow. Predicted short, medium, and long-term differences also suggesting that this currency will turn bearish. They've cut rates last week, like I said in the Forex Weekly Outlook. I assume they would. They did, and this is the outcome. We're still, we're still above parity, but I think that this represents a very good medium-term trade where we should be looking at somewhere down around the 99 level, potentially in the